Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 Canadian dividend stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we are discussing Canadian dividend stocks, but do not worry. All these companies today trade on both the Toronto Stock Exchange as well as major American stock exchanges as well, so you don't have to tune out just because they're north of the border. The stocks today all have some high dividend yields as well, with some as high as 6%. So we're going to take a look at these companies, what it is that they do, and of course we'll see how Wall Street analysts weigh in. Don't forget, right now TipRanks is having a 40% off sale for their premium subscriptions. So if you've been considering unlocking some fantastic research tools, now is the time to do so. You can follow the link in the description down below. Let's get right into these 3 Canadian dividend stocks. First up on our list today, we're taking a look at Manulife Financial. Their stock trades under the ticker MFC in Canada, currently priced at $24.59 Canadian, and they also trade under the ticker MFC down in the United States, priced at $18.17 American. Now, over the past year, they have seen growth of 20%, including growth of 5% in the last 6 months. They do score an 8 out of 10 on the TipRanks Smart Score as well. Manulife is a financial services company. They provide financial advice, insurance, and wealth and asset management solutions for individuals, groups, and institutions. At the end of 2022, they had more than 40,000 employees, over 116,000 agents, and are serving over 34 million customers. They paid out their first dividend back in 1999. And their current quarterly dividend is 27 cents per share for a dividend yield of 5.72%, well ahead of their sector average of 2.11%. They shared their most recent quarterly earnings on August 9th, where the company did come out with an earnings beat. And looking at their past earnings, they're pretty consistent on bouncing back between earnings and misses, though they're always quite close to those expectations. In Q2, they came out with earnings per share of 61 cents, beating estimates of 58 cents per share, and they reported core earnings of $1.6 billion, which was up 4% year over year. The Manulife stock does currently have 5 analyst ratings and comes in as a moderate buy, but they do think there's some upside potential there. With 2 buys and 3 holds, the average price target of $22.36 would be an upside potential of nearly 23% from current prices. And all of our ratings are a couple months old here. On the low end, we do have a couple holds, both with upside of 13.5%, and a buy rating on the high end with an upside of nearly 34%. Our second Canadian dividend stock is Pembina Pipeline. In Canada, their stock trades under the ticker PPL and is priced just above $40 Canadian per share. Down in the United States, they do trade under a different ticker with PBA, priced at $29.88 American. Now, they're come out flat pretty much overall over the last year, up 1.5% and down just over 1% in the last 6 months. And they do currently score a 10 out of 10 on the TipRanks Smart Score. And as their name so helpfully implies, Pembina Pipeline is in the pipeline industry. They are an energy transportation and midstream provider that has been serving customers for more than 65 years. They own pipelines that transport hydrocarbon liquids and natural gas products produced primarily in Western Canada. They also own gas gathering and processing facilities and an oil and natural gas liquids infrastructure and logistics business. They've been paying out their common share dividend since 2010. They currently pay a quarterly dividend of 50 cents per share for a current dividend yield of 6.4%, well ahead of the sector average of 3.75%. And I know it does say monthly here. That is because the company used to pay on a monthly basis but has now switched to quarterly. They also had an earnings beat when they shared their second quarter report at the start of August. Their Q2 earnings per share came in at 45 cents, which was 1 cent ahead of analysts' expectations, and that was on earnings of $363 million and adjusted EBITDA of $823 million. The company did also narrow their full-year guidance. With 6 current analysts weighing in on the stock, they do come in as a moderate buy. That is based on 4 buys and 2 holds. The average price target of $38 would be an upside potential of 27% for the next year. Down below, we do have a couple more recent ratings within the last month, including a buy rating from a 5-star analyst at BMO. He gives the stock an upside of 23%, and many other ratings around that low 20% mark. We do have a high-end rating from 3 months ago with an upside of 69%, and our low-end holds there still have an upside potential of 20%. And third on our list today, we're taking a look at one of Canada's big banks with Toronto Dominion, more commonly known as TD Bank. In Canada, they trade under the ticker TD, priced at $81 Canadian per share, and in the States, also under the ticker TD at $59.72 American. They are fairly flat overall in the past year with some ups and downs, and have seen growth of 4.7% in the last 6 months. They do score a neutral 7 out of 10 on the TipRanks Smart Score. TD is a top 10 North American bank. They offer a full range of financial products and services to more than 27.5 million customers worldwide. They also rank among the world's leading online financial services firms with more than 15 million active online and mobile customers. Now, TD has an incredible dividend history as they've been paying out their dividend for over 100 years. Their first dividend payment dates back to 1857. Their current quarterly dividend is 71 cents per share for a dividend yield of 4.59%. And yes, once again, we have another dividend that is well ahead of the sector average of 2.11%. And their next ex-dividend date is coming up soon on October 5th for payment on October 31st. TD did come out with a slight earnings miss in their last quarter, which they shared near the end of August. For their Q3, they reported earnings per share of $1.48, and that fell 3 cents short of analysts' expectations. Reported net income came in at $2.9 billion, and that did decrease slightly year over year. But several analysts have been weighing in following that report. The stock currently comes in as a moderate buy with 9 current analyst ratings. With 6 buys and 3 holds, the average price target of $70 would be an upside potential of 17% from current prices. And we can see some recent ratings coming in just the last couple of weeks of 13-14% upside. On the low end, we do have a hold from last month with a pretty flat price target, just 1% upside, and a high-end price target from Scotiabank with upside of nearly 25%. So there we have 3 Canadian stocks, all with dividend yields well above their sector average and trading on both American and Canadian stock exchanges. Let me know your thoughts on these companies in the comments down below and some of your other favorite Canadian stocks. I know there are a bunch of great ones out there. Please keep in mind these videos are never a suggestion to buy any specific stock, and make sure you always do your own research and due diligence and stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.